Hello. In this video, you'll learn how payroll accountants determine Social Security and Medicare tax withholdings. The Social Security Act of 1935 mandated the withholding of certain taxes in addition to federal income tax. Two different taxes are part of the Social Security Act of 1935 legislation: Social Security tax and Medicare tax. These taxes are collectively known as FICA, Federal Insurance Contribution Act taxes, and both the employer and the employee contribute in equal part to this tax. Social Security tax, formerly known as OASDI, was designed to cover people for illness, retirement, disability, and old age. In general, an eligible individual must work for 10 years or have 40 credits to be able to draw on Social Security. The Social Security tax is paid by both employer and employee and is levied upon employees up to a maximum wage amount that increases each year. In 2022, the wage base is $147,000, which means that only the first $147,000 of wages earned are subject to Social Security tax. Every dollar earned above $147,000 will not be subject to Social Security tax. In 2023, the wage base is $160,200, and in 2024, the amount is $168,600. There are currently discussions about implementing a special high-wage earner Social Security tax, whereby those who earn above $400,000 are taxed additional Social Security taxes on those amounts above $400,000. However, those individuals would not receive any additional retirement benefits. The Social Security tax rate is 6.2% on eligible wages. Remember that taxable wages can be different from gross pay because of pre-tax deductions and the wage base at maximum. There's an exception though. When an employee has multiple jobs in the same year, each employer withholds Social Security taxes. However, the employee's excess contribution is counted as federal income taxes, which means that you get credit for it on your annual tax return as if you had paid federal income tax. The employer's contribution, though, is not refunded. So let's look at how you would calculate the Social Security tax in the following example for 3 employees. Employee number 1 has a period wage of $3,500 and 42 prior pay periods for a total of $147,000. During the 42nd payroll period, the employee hits the maximum wage base for Social Security of $147,000 for 2022 and $0 of the wages for the 43rd payroll period are subject to Social Security. Let's now look at employee number 2, who is paid a biweekly wage of $5,850 and has earned $146,250 year to date. That means that for the current payroll period, period number 26, only $750 are subject to Social Security. What about the next employee? Employee number 3 is paid $6,800 as semi-monthly wage and has earned $142,800 year to date. That means that of the current payroll period, period 22, only $4,200 are subject to Social Security. Let's now look at the second part of FICA, which is Medicare tax. Medicare taxes provide basic health coverage for all individuals who generally have worked and paid Medicare taxes for 10 years or have a spouse who meets this requirement. There's no maximum wage base for Medicare taxes, and the tax rate is 1.45%. And this tax, just like Social Security, is paid by employee and employer. In addition, the Affordable Care Act of 2010 levied an additional Medicare tax of 0.9% on certain workers who earn more than $200,000 for single and earn $250K for married filing jointly and $125K for married and filing separately annually. This additional tax is levied only on employees. Only on employees. Employers do not pay this additional percentage. Our textbook is only using a threshold of $200,000 for simplicity. So please keep in mind that this is an additional tax on high wage earners, but there are no additional services that these individuals receive when they enroll in Medicare for the additional taxes paid. Eligible Medicare wages are gross pay less pre-tax deductions such as the Section 125 deduction for health insurance. And just a reminder, the 401k deduction is not allowed as a deduction in calculating the eligible wages for FICA taxes. So here are some examples for the calculation of Medicare taxes. Sam is a security guard for a local facility. He earned $1,355.50 during the most recent biweekly pay period and has earned $21,688 year to date. He's married filing jointly and claims 2 dependents under the age of 17 on his 2022 Form W-4. He has no pre-tax deductions. What is Sam's Medicare tax liability for the pay period? Well, first thing to remember is that the Form W-4 is for federal tax withholdings, and the dependents do not impact the Social Security and Medicare tax withholdings. So we can start with calculating the Medicare wages by first looking at the wages per pay period and whether there are any pre-tax deductions. In this case, there are no pre-tax deductions. So the calculation in this case is $1,355.50 multiplied by 1.45%, which equals $19.65. In the second example, Ina is a single full-time exempt employee who earns $232,500 annually and is paid monthly. Her year-to-date pay as of November 30th is $213,125. How much will be withheld from Ina for Medicare taxes for the December 31st payday? So this is an example where an employee is subject to the additional 0.9% Medicare tax withholding. So the first step is to calculate the regular Medicare tax withholding by first dividing the annual salary by 12, because Ina is paid monthly, and then multiplying the result of $19,375 by 1.45%, which is $280.94. We then multiply the $19,375 by 0.9% for the additional Medicare taxes of which is $174.38 for a total of $455.32. Here are 4 more examples. Let's start with the first one. Shoshana is a salaried exempt employee who earns an annual salary of $61,175, which is paid semi-monthly. She's married, filing separately, claims 2 dependents under 17 per her 2022 Form W-4. What is her total FICA tax liability per pay period? And when you see that the question asks for the FICA tax liability, that tells you that we need to calculate both the Social Security and the Medicare taxes. We need to also double check that the wages are below the maximum Social Security wage amount of $142,800, which Shoshana's wages are. So we'll start by dividing the annual salary of $61,175 by 24. There are no pre-tax deductions, and that is why we then multiply the result of $2,548.96 by 7.65% for a total of $195. Why 7.65%? Because Social Security is 6.2% and Medicare taxes is 1.45%. So what about the next example? Paulo is a part-time security guard for a local facility. He earned $498.50 during the most recent weekly pay period and has earned $6,176 year to date. He's married, filing jointly. What is his Medicare tax liability for the pay period? So to calculate the Medicare tax liability, we multiply the gross wages, because there are no pre-tax deductions, by 1.45% to arrive at $7.23. In the next example, Renee is a salaried exempt employee who earns an annual salary of $50,160, which is paid semi-monthly. She's married, filing separately, and claims dependents per her 2022 Form W-4. What is her total FICA tax liability per pay period? So just like we did in the first example on this page, we divide the annual salary by 24 because Renee is paid semi-monthly, which results in $2,090, and then multiply the $2,090 by 7.65% to get the FICA tax of $159.89. The last example is the same except for the salary of $64,200. So we divide the salary by 24 for the semi-monthly wage of $2,675, and then multiplied by 7.65% for a FICA tax liability of $204.64.